The US president has just declared a national housing emergency. And here in the UK, nearly 30% of landlords are considering selling their investment properties in 2025, which is almost triple the volume of people considering selling in 2024. Combine that with mortgage approvals dropping month on month and stamp duty relief being cut in April, you've got to ask yourself, is the UK next? My name's Bradley Ashley, the sales director for RWinvest. And over the past 2 decades, we've helped countless clients just like you grow below market value portfolios of investment property. We've learned over the years that we can help investors thrive through the good times and the downturns. They just have to be smart in what they're buying, where they're buying it, and what strategy they adopt. In today's video, I'm going to share with you what is really behind the US housing crisis, what makes the UK similar to the US from a property standpoint, and what sets it apart as an entirely different ecosystem. I'm also going to share with you how to get the most out of the current UK housing market for your investments. So what is really happening in the USA's property market right now? What most people tend to get wrong is that they believe that America's property prices have just collapsed overnight. In actual fact, this absolutely, of course, is not the case, and it's been a gradual correction. In markets like Florida, prices are down between 1% and 5%. Homes are sitting on the market longer and taking longer to find new buyers to take ownership of them. Inventory is rising, but it's a slowdown, not just a collapse and a free fall. The headlines, as they often do in the news and the newspapers, tend to oversimplify everything and give a very generic overview. What the US is actually seeing is regional corrections and not the entire country's markets changing. The advice I can give you around this will be, don't take the headlines at face value and look at the fundamentals of each micro market within the whole market in the country. Because absolutely, if you shop around in the right places, of course you can still find fantastic deals at good prices to provide you with brilliant returns. If you're an investor, I'll put a link in the description to provide you with our free market report. They'll give you a breakdown of exactly what is happening here in the UK right now, and they'll help you cut through all of that unnecessary noise, which will help you be able to focus a little bit more on what exactly it is you're looking for. You can download them using the link in the description below. Could the UK be next? I guess is the big question that we're looking for the answers to. What most people tend to get wrong is that they would assume that a property market can collapse like you would see with the stock market or a particular stock. Property investment and the property market is very different to stocks and shares. Where with stocks and shares, you can see big spikes and big crashes even during the course of a single day, based on a single news headline or a specific piece of information about the company that is trading. And with property investment, it's entirely different because, unlike with stocks and shares, the market still has absolutely got the ability to stabilize under huge pressure. Even in 2008, which is the worst of the housing crashes we've had in recent memory, property prices went down across the country by approximately 15%, and in some areas, only dropping by 4 or 5. When you compare that with stocks and shares, they can lose 40% of their value in 10 minutes. This is something we could just never see happening in the property market, especially in a property market that is as stable and secure as the UK property market is. History has, of course, shown us that downturns in the UK property market are entirely temporary, typically in the range of just a few percent over a period of a year or two. Even during the global financial crisis, we saw the downturns bounce back extremely quickly. During COVID-19, for example, which is a really extreme and unusual case, we only saw property prices go down by around about a single percent between March and April. By the time we hit December, those property prices had already jumped a whopping 7%. Yes, mortgage approvals in March 2025 fell to 63,300, which is the third straight monthly decline. We also know interest rates and mortgage rates are slightly higher than they should be right now, sitting at between 4.3 and 4.6% as an average. But the extremely good news is there's been a variety of announcements of the base rates beginning to come back down. And we have the very, very real possibility that by the time we hit December of 2025, the average mortgage rate will be sitting below 4%. And RWinvest is still expecting, across the board in the UK, 4% average property growth this year, with cities like Liverpool and Manchester increasing by more like 6, 7, and 8% during that same period. The advice I would give to anybody is focus on the long-term trends. Downturns are temporary, but the fundamentals and the recovery is what actually matters. But here's the real danger. It's not about downturns. It's about when you sit on the sidelines. Time in the market will always beat timing the market. And it couldn't be a truer fact. If you think that you're going to wait that little period of time for that exact right moment to buy, you could miss multiple opportunities and the chance for huge potential appreciations on your assets just by sitting stagnant. And not only that, the money that you're leaving in the bank today, waiting to get that right timing, is devaluing year on year with inflation. So not only are the prices increasing, but also the value of your money is decreasing. Holding cash in the bank is a guaranteed way to be losing 5 and 6% of the value of your money year on year. And at the same time, build costs and property prices are continually rising, further devaluing your ability to purchase. Even if house prices were to completely flatline, replacing the same property later on will cost you more money. If you have £200,000 sat in the bank right now, that £200,000 in 12 months' time could be worth £190,000. Whereas if you were to put that same £200,000 into a property this year, by the same time next year, it should be worth closer to £210,000, £215,000, which is a £25,000 swing on the same sum of money just by deciding what you do with it. Don't confuse cash in the bank with safety. It's actually guaranteed erosion. And while those costs are rising, your borrowing power is then also shrinking and diminishing. Since 2022, the average borrowing capacity in the UK has dropped by around about 25%. In March 2025, approvals fell, as I said, for the 3rd month running. Waiting doesn't give you more options, it actually gives you less. So, acting sooner locks in capacity before it shrinks further. That is when compounding slips away forever. Compounding is a thing that will only work if you give it time. As I've explained in a variety of my previous videos, every year you delay is another year of growth that you can never recover. You will always find a reason not to move forward if you look hard enough. But every year you are doing exactly that, all you're actually doing is hampering your ability to gain both equity and yield. What I would actually recommend, if these are things you're thinking about, explore the possibilities of buying something off plan. Off plan comes with a vast array of benefits, including being able to purchase an apartment at usually between 10 and 15% below the market value, which of course negates any peaks and troughs in the market that you would see. The other massive positive is, of course, if you buy a property off plan now that is completing in maybe 18 to 24 months' time, at the current trajectory we are seeing with the mortgage rates coming back down, by the time you're applying for your mortgage, the mortgage rate should already be sitting somewhere around the 3.5% marker, which is, of course, hugely beneficial to you for those all-important investor returns. If you like to stay up to date with everything happening in the UK property market and see exactly where you can find the biggest, best, and highest returning property opportunities in the UK right now, make sure you download our free market reports. The link is in the description below. We keep it updated with the latest data and insights to point you in the right direction so that you can make sure that your next investment property purchase is a winner. That's the truth behind the big US property market crash and what it does and doesn't mean for the market on home soil here in the UK. But of course, this story still is unfolding, and things in the property world do change month by month. If you want to stay ahead of the noise and understand exactly where the smart money is heading, please make sure you subscribe to the channel, like the video, and leave me a comment with your thoughts. That way, you'll always be one step ahead of the headlines and up to date in your knowledge.